Joining me on top of the charts is Damian Fernandes, who brought a chart that he says shows the largest one-month jump on record. And what's even more interesting, he says it might not be over. Damian, what's the chart we're looking at today?
Thanks, Sarah. So it's a chart compiled by the NFIB. And just for some perspective, the NFIB stands for the National Federation of Independent Businesses. Really, it's the umbrella group that represents small and medium businesses in the US. And this chart is really a collection of their survey results. So every month, the NFIB has 325,000 members. Every month, they run a random sample to 800 of their members, asking them about business prospects. Questions like, what is your outlook on the economy? What is your outlook for sales? Are you hiring more employees? Are you raising prices? And then they take all those answers and kind of combine it into an index, which they call the optimism index. It really measures confidence. Think of it as, you know, we have consumer confidence indices. Think of it as the small business confidence index, how small businesses are feeling about their prospects for the next 6 and 12 months forward.
And what makes this chart interesting right now?
Well, as you can see, we've had a massive spike. This really is unprecedented in the sense that we've had the largest one-month move in the small business optimism index going back to the inception. So this index has been around since the 1980s, so a lot of data here, but we've had the largest one-month move, and that came post-Trump. Importantly, where we are right now, it's the same levels we were back in 2004. So in 2004, US businesses were feeling a lot more confident about their prospects. Right now, post the Trump presidency, small businesses are feeling the same way.
Wow. So for our investors, what are some of the implications today?
Well, let's think about what this means, right? What really happened is that this survey was sent out after we found out that President-elect Donald Trump was voted in. And he won on a platform of lower taxes, of less regulation, and of faster growth. Now, small businesses are mainly domestic companies that do not have the same advantages as large caps and so on with accountants and transferring income. So they really pay the lion's share of high taxes. So they're feeling really good post the Trump's presidency because they're expecting to pay less in regulation. They're expecting their tax bill to be lower, and more importantly, they're expecting growth to be better. So what this really means in markets is that we actually went back and did this. So the Russell 2000, which is a collection of small and medium-sized enterprises in the US, the average market cap in the Russell 2000 is about 797 million. Compare that to the S&P 500, which everyone talks about. The average market cap in the S&P 500 is 19.5 billion. So much bigger companies. But the interesting thing is that post the election, what's happened is that small and medium-sized businesses, as represented by the Russell 2000, they're up 15%. The S&P 500, it's up 7.5%. So as an investor, you've made a lot more money investing in smaller cap companies. And to your initial point, why do you think this continues? If small businesses continue to demonstrate the same level of optimism, if Trump is successful in passing his platform or some of it, you can see this optimism index stay at these levels. And that will mean that smaller cap companies will continue to outperform the larger cap counterparts.
Thank you very much.
Sure.